afternoon, and thank you for joining us for today's National Conference of State Legislatures webinar. Our webinar today is hosted by NCSL's Natural Resources and Infrastructure Committee and is part of the committee's 2015 Spring Webinar Series. For a complete schedule and registration, please visit our website at www.ncsl.org. My name is Ben Hush, and I am the Committee Director for the NRI Committee. I will be moderating today's webinar, where we will explore what's next for the federal government's Renewable Fuel Standard, following last month's proposal from the United States Environmental Protection Agency for volume requirements that would apply to 2014, 2015, and 2016. Today we will hear from two great speakers, Paul Argyropoulos from US EPA on the specifics of the proposal and how EPA came into its decision. Our second speaker will be Professor Bruce Babcock of Iowa State University, who will help put the announcement into context and provide some analysis on how this impacts the RFS future. Before we begin, I want to review a few housekeeping items. Our webinar today is being recorded, and registrants will be able to access a recording of the webinar and presentation slides on NCSL's website. We will send out a notice shortly with a link to these resources. You can also download the webinar right now and slides by clicking on the Media Library button, which is in the upper right-hand corner and is kind of a yellow and blue button. Our presenters will be answering questions after all presentations, and please type your questions in the question box on the lower left-hand side of your screen at any time during the webinar. I will be monitoring them and will moderate the Q&A after all presentations. So without further ado, let me introduce our first speaker, Paul Argyropoulos, Senior Policy Advisor in EPA's Office of Transportation and Air Quality. He is responsible for providing advice and analysis to the Office Director on a broad range of transportation program issues with focus on fuels. He chaired EPA's intra-agency work group for the National Renewable Fuel Standard programs implemented under both the Energy Policy Act of 2005 and the Energy Independence and Security Act of 2007. With that, Paul, the floor is yours.
Well, thank you, Ben. I appreciate the opportunity to speak to you guys today and to provide a little bit more context and background on what we proposed several weeks ago now. What I'm going to try and do is give you a quick overview, and I will go through the materials fairly rapidly because I want time for Dr. Babcock to also prepare it in his remarks, and then also for some Q&A, which I think is really where the most interesting part of the program is. But I'll go ahead and give a little bit of background, not knowing how many of you are really familiar or intimately familiar with the RFS program. The first program was put in place under EPAct of 2005, and what we thought was a pretty sophisticated and progressive program back then, even though it was implemented in 2007. Very shortly after that, ESA in 2007 was signed, and we had a much more grandiose and sophisticated program. And we worked very hard on that program, and ultimately the final regulations for that went into effect in 2010. But the intent of the RFS program really was to get renewable fuels into the market, ultimately to provide some greenhouse gas benefits from the transportation sector, and also to support energy security in the United States. The Act itself has a specific schedule in there, and actually in the appendix, you can look at this later on. It has a schedule of volumes, and there are 4 categories of fuels: total renewable fuels, advanced renewable fuels, and then subcategories of the advanced category include cellulosic biofuels and non-cellulosic advanced biofuels, and a very specific category set aside for biomass-based diesel. And with those things comes a number of requirements, but one of the EPA's missions was to evaluate the greenhouse gas emissions benefits, and in order to qualify renewable feedstocks to fuels had to meet certain criteria, and those were reductions off the baseline fuel. So in comparison to gasoline and diesel, for instance, all renewable fuels, unless they were grandfathered, had to meet a minimum of 20% reduction. Advanced biofuels, either 50% or 60% in the case of cellulosic, and those certainly were challenges for us to evaluate, given there was no single model to do that. But in effect, we evaluated many of those fuels and have a table, and it requires, again, a specific feedstock, a set of technologies that can qualify, and then a finished fuel in order to do that. And if you do that, you generate a credit, or what we call a RIN, for the fuel. The statute also tells the agency not just to implement those, but under certain circumstances, it directs us to evaluate the circumstances of the market and potentially waive the volumes. We haven't had to waive any volumes other than cellulosic biofuel volumes up until the 2014 calendar year, and we propose to do that, and that's a long story, but the bottom line is we still had not finished finalizing the 2014 standards, but in the proposal we had proposed to actually reduce the standards based on a number of particular criteria, and I'll talk about those in a few minutes. But this is an annual process. We need to look at gasoline and diesel consumption, and then we need to take the volumes that we set based on our analysis and turn those into percentages, and the obligated parties being the refiners and or importers of gasoline and diesel then need to demonstrate or comply at the end of the compliance period, which is generally the end of each year, that they have blended and or obtained enough credits to satisfy the obligations. So the last time we had proposed the standards was November of 2013, and again I'll say that they were not finalized. But this particular proposal now moves forward after about 18 months of delay with setting standards for both 2014, 2015, and 2016 for all categories of renewable fuels. Now, the schedule requires that we actually go through notice and comment process, and on an annual basis that is a challenge, as I've mentioned, but it requires us to actually finalize the standards by November 30th of the preceding year in which they apply. So that's the timetable on which we're supposed to operate. This particular proposal addresses those years, as well as also we're supposed to set biomass-based diesel for 14 months in advance. I apologize if my phone's ringing and you hear that in the background. But we also are setting a single volume standard for the year 2017 for biomass-based diesel. And again, getting us on this schedule gets us all caught up, if you will. So looking at really what Congress intended, and again, this is one of the primary things, which there's a lot of controversy on our interpretation of the use of the waiver language and how we're applying it and setting the standards in this proposal. But the reality is we are putting a very strong emphasis on evaluating what Congress intended us to do, and that's to push volumes. And it also, under the waiver criteria, to evaluate what that means and apply that. And in this case, it recognizes a number of limitations that exist, not only in the ability to produce or supply biofuels, but in the ability of the market to actually consume them. So the general approach here and how we set the 2014 standards, given 2014 is done, is to look at actual volumes that were supplied. So the way we did that is we look at the domestic production and the amount of foreign production that was imported into this country. So we know at that point, based on our system that we have, where everybody must actually participate and submit the information into the system. And then because we don't have compliance determinations, our system doesn't have all of exports at this point, so we are relying on some data from EIA. But in actuality, we're looking at really what the market produced last year and setting the standards based on that production. For 2015, we're halfway through at this point, so we know what's happened up until the point of the proposal. And then we are also setting standards that take into account the fact the year's only, while it's partially over, there's still an opportunity to ramp up and supply more to the market. But the reality there also is we're not going to be finalizing those standards until the November 30th of this year, so most of the year will be gone, and we will certainly have to take that into consideration as we work to finalize the standards. For 2016 is really when the drivers come back into place, given that we're on track, recognizing the intent I already talked about under the legislation to drive volume, and we are looking at growth from 14 into 15 and also growth from 15 into 16. So these are the proposed volumes, and I'm just going to focus on a couple things. If you look at the total renewable fuel category there, you'll see from 2014 to 2015 there is growth of a little more than 300 million gallons year to year. And then from 2015 to 2016, it's 1.1 billion gallons of growth that we are setting standards for. The same thing in the advanced biofuel category. From 2014, from the actuals, there's still growth in the standards into 2015, and then there is additional growth going into 2016 in order of 500 million gallons of advanced biofuels. The other categories there, one which is again unique, and it's actually the only volumetric category, true volumetric category in some sense, is biomass-based diesel. And we have established standards from actuals in 2014, and we are showing, to provide certainty to the market, growth year over year. And again, that is an advanced biofuel. It is a long discussion about the fact that the Act only requires a minimum beginning in 2012 of 1 billion gallons, but it also instructs the agency to make evaluations as to whether the standard should be set higher. And we have done that in this particular case based on our analysis. Cellulosic biofuel has been very slow to market, of course, but we did see production last year. There are commercial facilities that have been built, and we expect them to come online. And additionally, given the qualification of biogas as cellulosic biofuels, we see a significant amount of growth occurring over the next several years as well. This is just several charts of the trends, and again, you can look at the actuals versus what's proposed. And for both the total renewable fuel, which is the top left, you'll see growth year to year. The proposed growth in the advanced biofuel category, you see from 2013 down to there was a reduction in 2014. We did not have the standards in effect there. That certainly could have been one of the factors as to why there wasn't growth. But you will see from 14, what we proposed as actuals, to 15 to 16, year to year there is growth, and the same in the biomass-based diesel category. So obviously there's lots of, again, things that are subject to legal interpretation, and we have to support legally our approach. For cellulosic biofuel, it requires us to set, again, on an annual basis and evaluate what the market is going to do, and we have some court instructions about how to do that, to take a neutral aim at accuracy. But we are required to project the volume that will be available for use in the market, and we have to do that and have been doing that for a number of years. So we account for that in setting the standards. For biomass-based diesel, again, the statute requires us to evaluate a number of different factors. There are kind of 6 major categories, and then there's sub factors under those things, and those are things that we have to take into account in consideration of the benefits, and as well as the costs, and also how we look at incentivizing both biodiesel as well as other advanced biofuels, non-biomass-based diesel. And we certainly would like to see the market not only increase with biodiesel, but also have the opportunity and incentivize the growth in other non-biomass-based diesel advanced biofuels. But when we look at this and setting the total and the advanced biofuel standards, and again, these are nested, the advanced is part of total renewable fuel, and biomass-based diesel and cellulosic and non-cellulosic advanced are all part of total advanced. So using the waiver authorities, we looked at how much cellulosic was going to be available. We can reduce in whole or in part the total advanced, and also subsequently the total based on that. So we decided to use that authority and bring it all the way down based on the difference between what the cellulosic category was required statutorily and then what we project to be available. And then also there's another waiver authority, and this is really where the controversy has come amongst some of the players out there in interpreting under the general waiver authority what the term supply means. We can reduce the standards based on inadequate domestic supply, severe harm to the economy or to the environment, and we have looked at the supply considerations here and evaluated those and have acknowledged the constraints in the market due to the lack of infrastructure, because a lot of this fuel really is ethanol, and there are some constraints in the ability of the fleet as well as the infrastructure to support the distribution of the ethanol and the use of the ethanol. And ultimately we came up with these targets as I had just noted on the previous page. So again, we looked at advanced biofuel, and given the growth in advanced from 2015 and beyond is all in advanced biofuels and cellulosic biofuels, that is the focus that the agency has derived from the Act itself, and that is really where we believe that the best benefits are going to be coming from, is from the advanced category. They are the lowest greenhouse gas emitting profile fuels, and we have looked at that in setting these things. And then, of course, the reality is there's a lot of different biofuels out there, and we're not prescribing any different types of biofuels other than the biomass-based diesel category, and then the volumes turned into percentages. But the market is going to be the one that determines, from an efficiency standpoint, economic standpoint, which biofuels they are going to use to satisfy the particular standards. I'm going to skip through this here other than to just point out the fact that some of the market conditions really are, again, the disconnect in the ability of going beyond what's known as the E10 Blend Wall. If you're not familiar with that, pretty much all gasoline in this country, other than maybe small volumes of gasoline, have 10% ethanol in them now to satisfy this particular RFS mandate. There are other opportunities for non-ethanol, but there are also opportunities for ethanol legally to be blended and used in certain vehicles at 15% by volume, and then of course the 85, which is not gasoline, it is an alternative fuel, and there are limited number of stations that sell it, about 3,000 out of 150,000 stations. And while has been an increasing number of vehicles out there, access to E85 and consumer awareness of E85 and pricing of E85 certainly has all been some factors that have influenced whether or not the E85 market will expand or not. But we believe that setting these standards, it certainly incentivizes some expansion, reasonable expansion year to year. I mentioned up front biomass-based diesel, these factors, and I think really the only thing that need to focus on here is the fact that these volumes that we're setting are indeed providing some certainty and guarantee for the biomass-based diesel industry to continue to grow year to year, but also the total advanced category still allows for the other biofuels to compete. The cellulosic biofuel, I really don't want to focus on the methodology. Here, it certainly is something that has developed over time, but again it wasn't so much that it was influenced by the court's decision several years ago to take a neutral aim at accuracy. It's just how we went about talking about what we're already doing. And because we haven't got it right, and it's very difficult to predict the volumes of fuels that will ultimately be produced and made available, you still have to look at, is the facility built? Number one, does it have a pathway? Number two, is the facility built, or when will it be built? Number three, is this commercial scale? Has it been demonstrated in a pilot? And then ultimately expecting that there are technology challenges, and when you commercialize the technology, not everything goes perfectly. So you don't go from 0 to 100% just immediately. So you have to account for actually how much is going to be produced. And so we've kind of classified these facilities and based on the time in a percentile ranking, and then we come up with the numbers for each year in setting the standards. And again, this last bullet here talks about the fact that the qualification of biogas from various sources was qualified as cellulosic, and you can go into CNG, LNG, or even electricity as long as it's used in transportation fuels. Those now can qualify for RIN generation under the program. So really the benefits here is putting the intent back on Congress. We are indeed still growing the conventional category, working towards the 15 billion gallon limit that Congress imposed in that category. Directionally focus on that the advanced biofuels are the fuels that continue to grow from here forward. And then also still acknowledging the fact that while there is growth opportunity, there still are some challenges, not just in the production of some of the fuels, but also in the ability to utilize them in the market. And you don't get benefits unless you actually use these fuels in the market. So where are we right now? We are in the comment period. The public hearing occurs next week. We have over 260 people that are registered to testify, so we've actually had to expand the hearing and run concurrent sessions. It's in Kansas City. If anybody wants information on that, it is posted on our website in a Federal Register notice, and it'll give you the details, but it's at the Jack Reardon Center in Kansas City, Kansas, and it starts at 9 a.m. on the 25th. The comment period will close July 27th, and we will have a lot of work to do between then and November 30th to go through all the comments, be responsive to them, address anything in the rule that is necessary to address based on the comments, and then finalize the rule by November 30th. And with that, I think that's the quickest summary I could probably do in giving you enough information to wet your whistle for questions. So thank you for your time.
Thanks, Paul. That was really informative. We look forward to hearing your response to some of the questions we've been getting in, and I'll take that opportunity to just quick reminder, you can type your questions into the chat box at any time, and we will hold them until the end of the presentations. With that, I am pleased to introduce our second speaker, Dr. Bruce Babcock, a professor of economics at Iowa State University, where he directs the Bio-Based Industry Center Research Program. Professor Babcock has written extensively on a wide range of topics related to the Renewable Fuel Standard, including the impact of the RFS on the prices of food and fuel and the effects of expanded biofuel production on land use. Dr. Babcock, with that, the floor is yours.
Thank you, Ben. I appreciate the opportunity to give you some of my thoughts on the RFS and the EPA proposal. I think it's important to first focus on really what is the RFS supposed to do if we're going to judge the EPA proposal, and kind of look at, you know, is the RFS still a good idea? So essentially, I think that the RFS is supposed to replace fossil energy with renewable energy in the transportation sector. That's the basic objective. But why would we want to do that? Well, it's to cut CO2 emissions. I think that's one of them. It's to reduce imports of crude oil. And by reducing the imports of crude oil, we essentially try to reduce funds for Middle East governments that we don't really like. So, you know, that's kind of a national security objective, an environmental objective, but also an objective is to foster rural development through greater agricultural prosperity. Some people say it's higher corn prices, but it's also not just corn prices, but it's also jobs, innovation, really trying to create an environment of greater prosperity based on renewable energy. So then these goals are there, so how is this supposed to happen? How is the RFS designed in order to accomplish these goals? Well, it's really designed to create a financial incentive to the country, for the country to expand their infrastructure that can enable expanded use of biofuels, and these include ethanol, biodiesel, or drop-ins. Ethanol and biodiesel are the two, and renewable diesel are the two primary fuels that we have now. And this does this by, we mentioned something about called a RIN price. You've probably heard something about it if you follow this at all about high RIN prices. And what the RIN price really is it's a market-based mechanism, just like a tradable CO2 permit or a carbon permit under a cap-and-trade system, but it's a tradable permit, and what it acts as is a tax on gasoline and diesel sales, and it's a subsidy to the biofuels. And the way that that tax is supposed to incentivize infrastructure is that oil companies who are obligated to meet the renewable volumes can reduce their tax by reducing their RIN prices by basically investing in consumer demand for biofuels. And so the whole mechanism here is a forcing mechanism or a market-based mechanism to create the incentives for oil companies to invest in a product that actually cuts their own sales. And so that's kind of the political difficulty. So Paul mentioned the E10 Blend Wall. So just give you some numbers here. About 137 billion gallons of motor gasoline are projected to be sold. So if you take 10% of that, that is almost all cars can use 10% of ethanol in the gasoline supply. That translates to about 13.7 billion gallons of potential use of ethanol by easy use of ethanol. You don't need extra infrastructure in order to use that level of ethanol. And the actual oil companies, the owners of the refineries, the producers of gasoline, like that 10% ethanol level, because what it does is ethanol is a good source of octane, and they can cut their costs of refining gasolines by using 10% ethanol. But to go beyond 13.7 billion gallons requires higher than 10% blend. So we have E85 and E15 are the two different blends that are higher than E10 that are in use today. So the feasibility of meeting beyond 10% RFS targets depends on inducing drivers to buy E85 and E15. So this slide just reproduces. I want to focus on, look at the 2016 column, and if you look at the implied corn ethanol number of 14 billion gallons for 2016, and other advanced of 0.49 billion gallons, you can see that EPA is pushing beyond the blend wall a modest amount, about 14.5 billion gallons. By my calculation, so look down at the second bullet there about that's supposed to actually be 2016. I'm sorry, this is a typo. That you cannot meet these volumes with only 10% blend. You're going to have to be the price of the blended fuels have got to be attractive enough and available enough for consumers to buy enough E85 to meet these targets. So I agree with Paul that says that EPA is trying to increase the volumes that are out there, and you can see for 2016 that it looks like potentially up to 14.7 billion gallons, which is 1 billion gallons more of ethanol beyond the blend wall, potentially would need to be used in 2016. So, but there's one caveat here, and I bring this up. It might seem like a technical caveat, but there's a compliance with the RFS requires the oil companies to basically turn in credits that show that they have blended the amount of fuel. Well, they've used a lot more fuel than they have been required to, so they have a stock of credits built up that they can use for compliance. By my calculations, at least 2 billion gallons of credits exist, and so oil companies are going to be using some of those credits instead of the fuel to meet their obligations in 2016. What this does is it takes the pressure off the oil companies to invest in the infrastructure needed, because why invest in the infrastructure to expand E85 if I can just use these credits? And I think that a big uncertainty is really how many of these credits are going to be used in lieu of actual use of biodiesel and ethanol. I think that's a key question that that EPA is going to get a lot of comments on during the comment period. So in part response to that, a key issue is what happens after 2016. As Paul said, the EPA has proposed to increase the biodiesel volume, but are they going to increase the ethanol volume? If they are, I think it's imperative that they announce it today so that the credits can be doled out over the next few years and the investments can be made today so that we can actually use the fuels in 2017. It takes a while to expand infrastructure, and the lack of knowledge of what's going to go on in 2017, I think, is really going to harm those investments. If EPA is not going to expand these volumes, they should announce it today, and then the credits can be used, and we won't waste that extra money. So I think that the weakness of the RFS is this annual uncertainty about what the volume is going to be. If we could get less uncertainty, then we could get that infrastructure that's needed to expand the use. So in summary, my idea of the impact of what EPA's proposal is that I think that it will create incentive in 6 months to expand ethanol fueling infrastructure. it does create incentive to import sugarcane ethanol, and it creates incentive to produce and import biodiesel and renewable diesel. So all the objectives of the RFS essentially are consistent with what EPA has done, but they will be particularly consistent if EPA is going to continue to expand those volumes in 2017 and beyond to give the certainty that's needed to justify the investments that should be going on today to enable us to be able to use those expanded volumes of renewable fuels. So I'd like to just switch gears a little bit to address some of the common criticisms of the RFS. I travel quite a bit on both coasts, and there's lots of criticisms of the RFS by both by oil companies, by livestock organizations, by anti-hunger groups, by environmental groups. And so what I thought I would do is just give some highlights on some of the research and the data that I've generated to try to see if there's any validity on these criticisms. So you probably all heard more biofuels means higher food prices. We're taking food out of the mouths of hungry people because of biofuels, and that's unethical, immoral, and it's just bad policy. The other one is that this high tax that I mentioned on gasoline and diesel, that it increases fuel costs. So that consumers are paying a big tax to support biofuels, and that we're paying more at the pump because of the RFS. Recently, we've been hearing things that biofuels are worse than coal in terms of CO2 emissions. And that's primarily because the argument goes that to expand the production of biofuels, we have to expand our land base. And when we cut down trees to plant more crops or plow up virgin land, we lose all the carbon that's either in the trees or in the soils. And so that makes biofuels worse than coal. And the last one you probably heard is that E85 is a failed fuel. That is, there's no consumer demand for these higher blends, and so why would we even want to go? We should just, beyond that E10 Blend Wall, we should just stick to that E10 Blend Wall. So let me just address these quickly, one at a time. So first chart here is the food inflation rate that we've seen. I got this charted back to 1990 through 2014, and you can see the food inflation has been fairly calm. It averaged about 2.5%. At 1990, it was closer to 6%, and then we see one spike there in 2007. Then we see very low food inflation during the Great Recession. And so the question is, there's no evident pattern here with regards to biofuel production. So then what I did is I plotted biofuel or ethanol production and as well as the food inflation rate. And, you know, you look at that and you say, well, we really spiked up corn ethanol production in 2006 and 2007, and that was right when we saw that big food inflation. So, well, maybe it does cause food inflation. But you can see also we continued very high levels of biofuel production, and food inflation has come down quite a bit subsequent to that. Another factor that a lot of people think drives food inflation is oil prices. So then when I put oil price, crude oil price there, and then try to explain food inflation with oil price, you can see that, you know, that the spike in 2007 for food also coincided with the spike in oil prices. When oil came down, food inflation came down, oil went back up. So so the two conclusions I come from this are, one is that food inflation has been under control over this time period when we've had greatly expanded biofuel production. And if you're going to blame something for food inflation, I would say look at energy costs in general due to transportation costs. The second question is how does do the RFS affect the price at the pump that we pay? So my colleague and I have a paper that we looked at this, and we basically debunked the theory that the RFS will raise the price of that 10% blend that all of us use, or most of us use in our cars. So what I did here is just show that on the vertical axis here, I have the retail price of E10, which is the regular gasoline 87 octane that all of us buy. And then I calculated how much would that retail price increase if we, for different RIN prices, which are dollar per gallon, and the RIN price, again, is that tax on gasoline and the subsidy to the ethanol producers. So if you look at even $1 a gallon RIN price, which is very, very high, raises at most the retail price of gasoline from $2.31 to about $2.33, at most 2 cents a gallon. And this is under assumptions that the gasoline, the oil companies can freely export as much gasoline as they want, take it off the domestic market and send it overseas. So the idea that this program is inflating the price of fuel at the pump to any significant degree is just wrong. Getting into the environmental aspects of biofuels, the big knock against biofuels is it results in large conversion of land. And that assumption or theory is based on lots and lots of models that have been developed, but they're models. So what I did is I went back and actually tracked what's happened over the last 10 years when we see this great expanded biofuels, and looked around the world and saw which countries actually expanded land in order to meet the total demand for agricultural products. And so we got these are the net increase in land conversion from 2005 to 2012. And when you see the zero line, which I hope you can see that, the zero line means anything to the right of zero means you expanded land, anything to the left means you've actually contracted land, that you've used less land in agriculture. So if you look at the countries that have used less land during this biofuels boom, it's China, South Africa, India, rest of Asia, EU. The US is about zero, Ukraine, Japan, big countries that have not used land. Those that have used land are primarily some in Brazil, Argentina, but it's primarily Africa. And Africa expanded land primarily because they're subsistence farming without access to technology, and it's the only way they could expand agricultural production. So I think this really draws into question the conclusion that biofuels is bad for the environment because it causes lots of land conversion. You can explain most of the land conversion in countries because of a bad public policy or a lack of access to technology. And then finally, E85 is a failed fuel. So what I've done here is I've given you a little scatter plot of fuel cells. So on the horizontal axis is total quantity of E85 sold, and this is at one station in Ames, Iowa, where I'm located. And then on the vertical axis is essentially the ratio of the price of E85 to E10, and that ratio. And you can see that as that price of E85 goes down, fuel cells go up. Ethanol contains less energy per gallon. So the cost per mile of E85, which contains 75% ethanol, is higher if it's priced at parity with E10. So what you have to do is lower the price of E85 by about 22% to put it on a fuel cost parity with E10. And so if you then fit a line to this chart, you can see that as the price of E85 is lowered so that consumers' cost of driving is equal between E85 and E10, then sales take off. And then if you discount the fuel so that drivers actually save money with E85, they all switch, or many drivers of flex vehicles switch. So I bring this up just to demonstrate that it's not that E85 is a failed fuel, it's that no one buys it if it costs them more to run their car on it. And if it costs them less to run their car on E85 or equivalent, then E85 sales will take off. Consumers like to save money, not surprisingly. So when you have blockages to the access of E85 in terms of either the price or the availability, then sales will be limited, which goes back to my original point of how to meet the RFS targets. We're going to have to greatly expand the availability of E85, but more importantly, get it priced right so that consumers will buy it. So at that, I think we have some time for questions.
Thanks, Professor. It was a really, really helpful analysis. I am sure following all this has made for a very hectic past month. So with that, let's move to some questions that we've received over, I guess, the past 30 minutes or so. And don't forget, if you have a question, please type it into the box on the left-hand side. But also just want to remind folks, this webinar is being recorded, and it will be made available to all participants. So Dr. Babcock, I'm actually going to throw the first question to you, as we got that kind of during your presentation. And just the question was pretty simple, kind of you obviously showed a number of different graphs, and the question was really, have you charted the price of corn over the same time period that you showed kind of, food inflation as well as the inflation of gasoline or oil?
Yes, the price of corn has almost nothing to do with food inflation. You would see a spike in the price of corn in 2012 when we had the big drought. You see another one in 2008, and the 2008 spike kind of corresponds to that food inflation spike, but all commodities were going up during that time. But the 2012 spike, you see almost no relationship between actual food inflation and the price of corn. And the reason is that the value of corn in the U.S. Retail basket of goods we buy is so small that you could double the price of corn and have double the farmer received price of corn and have almost no impact on the cost of producing that basket of food at the retail level to consumers. So that's why there's probably sound theoretical reasons why biofuels have not dramatically increased or have not really contributed in a meaningful way to food inflation.
Great. And Paul, I wanted to address, or hopefully have you address one question that came in while you were speaking. You talked about meeting the mandates from Congress, and just is there an expectation within EPA that Congress might make legislative changes to the program, and if so, what those might be?
Yeah, sure. Thanks, Ben. I don't think we would speculate as to whether Congress is going to make any changes or not. There have been bills that have been floated up there, and there have been over a number of years on these things. I mean, our job really is to continue to implement this program to the best of our ability and to follow what we believe is the direction and the intent of Congress, and to apply that in how we set up this program and the regulations. And then to the extent that Congress has anything, we would provide technical assistance and advice as requested.
Great, thanks. And I'll throw this question out to both. You actually got it two different ways, or I guess really in simplest terms, kind of what has been the reaction both from the oil companies, the industrial side, as well as I guess maybe the the ethanol refining side. So Paul, I'm not sure if you can comment on that, but I got that question twice, so I wanted to make sure I put it out there.
Sure, I can certainly comment on that. I mean, there's been lots of things out in the press, so a lot of people may have seen a lot of this reaction, but it's not really unexpected, the reactions that we have seen. And the ethanol interests generally are not happy. They believe that we had misinterpreted the language and applied that, and setting and utilizing the waiver standards and setting the standards themselves, and they would believe that we should be setting the volumes at statutory levels. The refining industry as a whole believes that we have gone beyond the blend wall, and that the agency is pushing too hard on this, and we should be reducing the standards based on what we proposed.
Dr. Babcock, I didn't know if you had, in kind of following the proposal, seen anything that you wanted to comment on with regards to that question?
Yeah, I'll just go from the perspective of the obligated parties, the oil companies. They want nothing to do with E85. They argue that they don't control the retail outlets. They have no ability to increase consumption of E85. The idea that they should be making investments in to cut sales of their product, which is gasoline, just rubs them the wrong way. So their position on this is pretty clear from a market share perspective. They don't want to cut their own market share. but the economic arguments they use don't hold much water with me. Frankly, if they were forced to do it and to make those investments, you could see some contractual arrangements being made where they finance the expanded ability to use E85. They could use their leverage at the terminal markets to get the E85 priced right. So I think that they just don't want to cut their own market share, but the economic arguments they're using, I think, don't hold a lot of water.
Yeah, I mean, I just to kind of add on to that, I mean, the wholesale price of fuel at where the retailers purchase these products, and putting aside whether or not how much control they have over this or not, if you are a retailer, you are at liberty to set the prices of your fuel at your retail facility, and that's part of the reason why 85, even though there have been some pretty good spreads between gasoline and E85's pricing at the retail level, there's not a lot of competition, and those that have invested have chosen to sell lower volumes and recoup profits to try and expedite the payback on the investments they've made. And to the extent that they can do that, I guess they are willing to do that, especially in a non-competitive market. To the extent that E85 is priced more consumer-friendly, energy parity or better, as Dr. Babcock pointed out there, we would expect to see over time investments being made, regardless of who's making them, in a competitive market being established where this would certainly support increased sales volumes of E85 over time. The point is, how quickly can that happen? And I think that that's part of the, this is a year-by-year standard. So doing something over a year and getting many more stations that actually already have the ability to sell the product themselves to actually sell it and sell it at a price that creates some additional competition and leverage there in the market, that would be something that'd be great. But over a year period of time, you just can't go from 3,000 stations to 150,000 stations selling it.
Great, thanks. And this next question I actually thought was really interesting. I think it might be based on the announcement actually probably a couple hours ago regarding essentially new CAFE standards for heavy trucks, but just, and I guess, Paul, I'll start with you on this. Is there a tie or potential tie-in between the renewable fuel standards and kind of CAFE standards, in that, if a car or vehicle was able to use kind of a higher ethanol content, given the greenhouse gas reductions that might go along with that, would that necessarily translate to a lower CAFE requirement for that automobile?
No, I mean, again, the standards are basically set with the manufacturers. They produce the vehicles. They have standards that they have to meet, whether it's greenhouse gas from our perspective or corporate average fuel economy from the DOT NHTSA perspective. But the reality is that that's a corporate-wide average fleet, and they must meet those. So the technologies that so as performance, the technologies that they use, really, it's at their discretion as to how to do it. If there were an incentive to use a higher blend of ethanol, and again, people have talked about E30, and in order to provide another opportunity for technology deployment to meet those, then certainly there still is a market gap or divide between that. So you will hear the automobile manufacturers say, well, if all the fuels are there, then we'll build these things. And then you'll hear the refiners say, well, if the vehicles are there, we'll produce the fuel, because that's what our job is to market those fuels. So there's the chicken and the egg, or the cart before the horse, et cetera, all of those sort of things. But I think at some point the market really works these things out. And there are a number of different opportunities to do that. And I think the uncertainty as to what's going to be built and what fuels are going to be available isn't necessarily going to go away. But certainly at some point something will come together where the market will figure out how to meet these regulatory requirements. And at the same time, our job here is to implement these standards and to continue to push renewable fuels into the market based on the intent. And I think that that's our goal. Great.
And just last question that I got, and I'll throw this out to both of you, but Paul, it might be a little bit more geared towards you. Are there, any specific, and I think you touched on this a little bit in your presentation, are there certain factors or, I guess events that you look at in kind of determining, maybe a timeline for greater use of advanced biofuels, cellulosic biofuels, kind of outside of your, kind of standard ethanol production?
Yes, I mean, certainly we look at the types of biofuels that could potentially come into the market, both on pathways that we've already authorized and those that have come into us and are looking at new pathways. And I think the reality is there are a number of opportunities for drop-in fuels, non-ethanol, advanced biofuels, and cellulosic biofuels. There are pathways that are available for people to utilize existing feedstocks and to ultimately take a product and turn it into something that can be potentially even co-processed with petroleum and still qualify. And it would be more transparent to the market, to the infrastructure, to the vehicles under the kind of existing circumstances that we have now. And then, of course, there's the opportunity for new fuels as well. I don't think that there's a limit on the opportunities, but I certainly think that these particular biofuels and the producers, they need to have a pretty certain path forward, both from an investment perspective as well as from a longevity of, is this the fuel that can sustain the investments that I am putting into it to produce a product that is going to be utilized over the course of the next 10, 15, 20 years or not, or potentially even longer to recoup those investments. And, liquid fuels are going to be around for a while, whether it's ethanol and an expansion of ethanol based on the incentives that the market's going to ultimately create, or whether it is actually technology is going to transition to consider these other infrastructure issues and try and move towards more drop-in fuels or even alternative fuels. So I think there's a lot of opportunities out there. It's really hard to predict the future, and I think Dr. Babcock's look at it back in the past is those are all things that are a great way to reflect on what things have happened and maybe where things could be going. But I mean, again, I think our focus really is to allow for those opportunities to present themselves and us not to necessarily be an inhibition to the market making those adjustments.
Great. And Dr. Babcock, I didn't know if you had any last thoughts on what Paul said, or any other closing remarks.
The only thing I would say is that I think increasingly the U.S. is going to be, and the world is going to be looking at climate policy. And I think a key feature for the transportation fuel area is if we adopt policies that have an explicit objective of cutting CO2 emissions, that's a different kind of a policy than one that singles out transportation fuels for CO2 emissions. And so the sooner that we can agree on what kind of future policy that we're going to have for climate and reducing CO2 emissions economy-wide, the sooner the certainty will be obtained that is needed to make the kind of investments that in both technology but in plants that will meet the objectives of the policy. So I can't stress enough in this area the role that policy certainty can make, and the lack of policy certainty that we have currently because of the dysfunction, I think, at the U.S. congressional level, and it is really damaging to making the kinds of investments that we need to make.
Yeah, well said. I agree.
Well, thank you both so much. Once again, I just want to extend a really big thank you to both Paul and Dr. Babcock for joining us today to provide some very valuable insight into the Renewable Fuel Standard. Thanks to all the attendees for participating in today's webinar. As a reminder, today's webinar and presentation will be made available. You'll receive an email shortly about how to access these resources and register for upcoming webinars in the NRI Committee's Spring Webinar Series, including next Friday's webinar, which I will note is the last of our series on the implementation of the Food Safety Modernization Act. So thank you for your continued support of NCSL, and I wish everyone a great weekend. Thanks again. Bye-bye.
Thanks. Take care.